All right. We're back on the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Alexandre Laizet. I appreciate you joining me. Thanks for the time.
Thank you, Tim. Very happy to be here with you.
I'll give the viewers a little bit of background on you. You're the Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group. And the Blockchain Group is a company specializing in Bitcoin Treasury management. In your role, you focus on accumulating Bitcoin, right, which we all love to hear, and holding it indefinitely, which we also really like to hear. and you utilize the capital markets to finance these acquisitions. Previously, you were the digital assets lead at Accenture, where you worked with over 30 financial institutions and multinational companies, multinational corporations on digital asset custody, payments, and tokenization strategies. And certainly you're also active on social media talking about Bitcoin and related topics. So I guess with that as a background, could you share with us a little bit more about your background, your journey to Bitcoin, and then what the Blockchain Group is up to as far as your approach to accumulating and financing the Bitcoin holdings and, speaking to the capital structure or whatever else you'd like to share?
Absolutely. So effectively, as you said, I'm a Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group. It's the first Bitcoin Treasury company over in Europe. We are fully focused on increasing Bitcoin per share over time. And that's also my full focus, fully focused on raising capital and increasing Bitcoin per share through our accumulation of Bitcoin. And prior to joining the Blockchain Group, I also started my career at EY, the big four firms, as an economist, where I used to work with half of the 40 biggest corporate treasurers in France as an economist on their international intragroup transactions, cash management. And it was, I think, back in 2020, during COVID, that I discovered Bitcoin. And at the same time, I was seeing treasurers waste billions and billions of value in monetary funds while we had negative interest rates. And at the same time, Microstrategy was starting to launch their Bitcoin strategy. And so the difference was clear, and I decided to focus my time and energy working on Bitcoin full time. And so I started at Accenture, leading the team, notably in France and over in Europe for digital assets. And I worked through this with systemic banks in Europe, America, Asia. And I used to help them set up their digital asset custody solutions, finding the right partners, tokenization of financial assets as well. And that's where also I discovered that everything would come down to Bitcoin, even tokenization of financial assets. And so for this, I also saw how Bitcoin was being adopted at scale by financial institutions. I was already a Bitcoin maximalist from back 2020 and basically Michael Saylor class 2020. And of course, all the other Bitcoiners that helped me along the way. And so I was contacted by a Blockchain Group to implement the Microstrategy playbook at a European scale. So I, of course, said yes, accepted the challenge. Of course, people ask me why the Blockchain Group, if it's focused on Bitcoin Treasury. The answer is that the Blockchain Group had previously a subsidiary focused on Web3 wallets, which was quite a hard activity to be in, as we know Bitcoiners, but that basically didn't survive the last bear market. I actually knew them through my past role at Accenture, because a financial institution wanted to partner with them, and I told them that basically they were not at the standard. So basically, this company was liquidated, this subsidiary dedicated to Web3 wallets, and that's also part of why I joined, because now the Blockchain Group has two operating companies, Iorga and Triman. They are focused on data intelligence and AI technology consulting and web development, including also some blockchain development for clients that want it. So now it's a return to profitability after liquidating and getting rid of non-profitable companies. And so I determined that this was a good situation with a profitable company now and group with strong foundations and an activity that is quite in a good sector with data and AI to launch a Bitcoin Treasury company strategy fully focused on Bitcoin. And so we launched the strategy on 5 November 2024, and we raised directly first 1 million with a premium of 70%, plus then another raise 1 month later of 2.5 million, including Adam Back as a shareholder that I knew from my past experience at Accenture, working with banks on tokenization of financial assets and inclusion of liquid potentially. As well in these aspects. So Adam Back joined us, and we are very glad to have him on board. We also have, for example, Yves Chauffati through his personal holding that joined us. He is also the founder, president of a 4 billion asset manager in France named Tobam that launched back in 2017 the first Bitcoin open-ended fund. So we have strong shareholder base fully dedicated to Bitcoin. And also we have a board that is dedicated to this strategy with Ludovic Chechin-Laurent, who is the co-founder of Capital Union Bank, the largest independent bank in the Bahamas. And Jean-François Descaves, he's an ex-asset manager. And also Jean-Philippe Quesada-de-Pax, who is the CEO and handles the operational activities, of course. So now we announced our plans on January to raise up to and even above 300 million euros to acquire more Bitcoin. And so we have a general assembly on 21st February to have the authorizations needed to implement this capacity plan to acquire more Bitcoin. And this list where you have the top 70 publicly listed companies with Bitcoin on the balance sheet. So far, we have 40 Bitcoin and we are like number 61. And so, of course, the target is to go as fast as possible on the left part of the list with the companies that have more Bitcoin, because we believe that's the more accretive strategy for shareholders, of course, as you know.
Is there a specific short or medium term target that you have in mind? The number that I've heard quite a few times as a theme has been 1,000 Bitcoin. So I don't know if you can speak at all to that.
We have not mentioned a specific target for now. However, as you see, we have asked for authorizations for beyond 300 million euros, which would potentially allow us, depending on how we implement, to reach such a target of 1,000 BTC, which is highly important for many reasons. But first, there is, of course, I think Bitwise launched an ETF for Bitcoin standard corporations with the 1,000 BTC mark. And also, basically, when you reach market caps of 100 million, 400 million euros or dollars, you get the possibility to raise institutional capital at scale with large financial institutions. So, of course, that's also why this type of number for the capacity authorizations was selected, because it's a key target, of course, to have in mind. But for now, we have not published a very specific plan in terms of the short-term targets.
Got it. Can you speak to any of the main challenges, but also opportunities that you've observed for corporations that are considering Bitcoin as a treasury reserve asset?
Yeah, absolutely. I think the most challenging part is from a legal perspective. Depending on the country you are, basically you will be able to do a lot of things. There are a lot of opportunities in any country. but they are very specific to the country you are in. So the chance we have in the European Union is that now there is also some common standards across the EU. And basically, you have a lot of options at your disposal to do any equivalent operation that MicroStrategy has done, that Metaplanet has done. So basically, you have a lot of options at your disposal, but the partners you will work with have not necessarily done it before. The lawyers you will work with, it will be their first time to do a Bitcoin Treasury company strategy implementation. And so you have to guide them through all of our language and the targets. And as you know, like MicroStrategy, when I assume when they first launched their converts, 0% coupon and so on, and people are not accustomed to this kind of terms and this kind of mechanisms. So I would say that it's more about education on all the terms. You have to educate a lot of investors, you have to educate a lot of partners, lawyers, and so on, put in place a lot of processes. But the good surprise overall is that at the end of the day, as a publicly listed corporation, you have a lot of options at your disposal locally and across the region you are in to execute on the plan to increase the Bitcoin per share, quite independently of the country you are in, because even if you have difficulties in the country you are in, you always have the option to create a specific subsidiary in another country and so on. So I would say that that's the main point, but it's not blocking. And I would encourage any company to look at the ways they have to get on that list of publicly listed companies with Bitcoin.
What are some themes and takeaways from your recent conversations with investors? You mentioned that they're not used to seeing some of these terms and structures. So just is there anything else that stands out to you from your conversation with investors?
Well, what stands out is that for large institutional players, at the end of the day, what matters to them is size. And of course, that's what you have seen with MicroStrategy. As much the company raises in capitalization, as much options they have. And so I've had insights that have shown that in Europe, with certain players, MicroStrategy products have even more demand than all over derivative products that some institutions have, So at the end of the day, the more you grow, the more institutions are interested in your stock, and the more institutions want also to provide you with new options. However, when you start, it's quite different. And at the end of the day, as a small cap company, if you are one, you will need to start with Bitcoiners and Bitcoin investors and Bitcoin related companies or financial institutions that already have a foot in the space. So I would say just a case of steps to take to go from the very convinced base, like Adam Back. If you find someone that would be more convinced, it's quite difficult. And so you go from the more convinced to the people that are more there for just the financial returns, let's say, and want more warranties. So, of course, at the beginning, there is more risk, but also more return. And then later on, there is a bit less risk, but potentially a bit less return. And the good thing is with Bitcoin, even with less risk, you can get potentially a very exceptional returns as well. And that's what we are seeing with MicroStrategy. So something in parallel that is happening that is quite interesting is that before that, when I was digital assets at Accenture, I used to see within the major systemic banks how slow processes were and how slow they were implementing things and implementing Bitcoin-related products. But the good thing is this is changing very fast. By the end of the year, you will have 2, 3 major systemic banks in France, Belgium, that will have also launched their offering for retail and institutional players. Some of them have even already launched it discreetly without telling, for some corporate or institutional players. So basically, this is with of course, the BlackRock ETF that has changed everything. And now even the most careful player, they want to position and they want to help the players that are starting this type of strategy because of the precedent of strategy. Now, sorry, I said MicroStrategy a lot of times, but because of the precedent of strategy and Metaplanet in Japan that is doing incredible work as well.
How does the blockchain group think about managing the volatility of Bitcoin on one hand, and then kind of squaring that with any security risks associated with substantial Bitcoin holdings? Is there anything that any conversations around that you've had?
So in terms of the volatility, of course, our objective is to maximize volatility. We've seen the volatility firsthand because, for example, the day of the inauguration of Donald Trump, we were like 30% up, whereas Bitcoin was flat. So you see that our stock is extremely volatile, even compared with Bitcoin. For example, since the launch of our strategy, Bitcoin is up like 30% since 5 November. We are up between 150%, 250%, and Metaplanet as well, for example. MicroStrategy is more tracking Bitcoin since the launch of our strategy, but that's mainly because I think they are preparing more things to come, and they have been focused a lot on the ATMs. So this will potentially change as well. So in terms of volatility, we want to maximize it. We want to raise as much capital as possible in an accretive way. And of course, the best practices there are from MicroStrategy with premiums to the current stock price, with long-term debt, and so on. So we want to maximize volatility. And then on the security side, so far we have worked with a French bank that you meant security on the digital asset custody side or something else?
You mentioned several banks kind of coming online with products at some point between now and the end of the year. How do you foresee the regulatory environment, I guess specifically where you're operating, but also globally, if you want to speak to that, evolving in the next couple of years, and what implications might that have for Bitcoin treasuries?
I see. So then in terms of volatility and related to this topic of security or safekeeping of the BTC and the management overall of the treasury strategy, I would say that we are contacted every week about opportunities to make our Bitcoin work and so on. And we are relentless in the fact that we don't touch the Bitcoin. We hold it indefinitely and without intention to sell. And we don't want to play games with the Bitcoin we raise. We believe that the best value add that we have for shareholder is to focus on raising more capital and accumulate more Bitcoin, and don't try to play games with hedging strategies and like people speak about covered calls and so on. We want to focus our time and energy on raising as much capital as possible to acquire as much Bitcoin as possible in an accretive way for shareholders. So, however, we've seen interesting things coming from Metaplanet. They have a Bitcoin income strategy where some of the capital they raise is dedicated, and a very small portion is dedicated to Bitcoin income generation strategy. When they do this kind of strategies to have not only assets on the balance sheet, but also some revenues coming in. That's quite interesting. But I think we have first to go to some critical size before exploring this kind of additional strategies, but even Metaplanet, they do it as an extremely small percentage of the capital they raise, you see. So I think it's just a different way to diversify the activity and the operational activity, but it's not to mix with the treasury, the core treasury for the long term. Something else that I think people understand about Bitcoin treasury companies is that they analyze them at just their potential to raise capital. But over time, Bitcoin treasury companies will be the most valued companies in the world, and they will have the best options in the world to do any type of external growth operations that will allow them to both increase their Bitcoin per share and increase their revenues over time. Because you can imagine a future where you have various Bitcoin treasury companies in the world with various operational activities that generate millions and billions in revenues. And imagine if they merge. Well, you will have massive gains that will be created for shareholders, because from the point of the operation, you might get only from the operation an increase in Bitcoin per share, plus a gain in terms of the capacity of generating revenues over time. So we've seen that with miners that have started to have some M&A activity. And I think maybe for the next cycle, but over time, we will see this kind of activity as well develop in the Bitcoin treasury company landscape. And then on the security side, for the custody of the Bitcoin specifically, we have chosen, for example, Banque de l'Ibac in France for the first raise that we have done, because first it's not a huge amount of Bitcoin, and compared with the balance sheet of the bank, it's completely reasonable. And they use a technology partner called Taurus in Switzerland that is really not the gold standard, but the Bitcoin standard of custody technology in Switzerland, from what I've seen so far with the work I've done with banks. And so many banks have developed capabilities, but many of them have had regrets because they have partnered, for example, with Metaco that's been acquired by Ripple. And so many of them have now technology that is related to Ripple in some ways. But even them, I think it's to be nuanced, because even when they use this technology, they take this technology and then they implement an in-house security system with their own HSMs on site and so on. So actually, with all their processes and all the on-site equipment, even the risk related to the tech provider is quite limited. Even sometimes they just take by themselves the HSMs and so on. So I think that overall, the banks are doing things in a very institutional manner and in a way that will overall preserve the security. The thing I think where there will be a need to preserve some caution for Bitcoin treasury companies is to not use leverage in a way that wouldn't be in the way that Microstrategy has done with long-term and not like doing a margin leverage on an exchange and so on. I think with the products that are being launched, and extreme softening of the regulation in the US that is probably going to happen with the new administration, with the ability to do a lot of different things for banks on Bitcoin. We need to be cautious on not having fractional reserve banking on top of Bitcoin, basically, and having a lot of leverage that would not be really backed by Bitcoin. Potentially, it's possible to do it with a low leverage, but it seems like there is quite a high possibility that it will evolve towards more leverage and leverage on top of leverage. And so I think people thinking about the Bitcoin treasury company strategy need to consider the risk of not playing around with Bitcoin, because at the end of the day, Bitcoin is truth, and if you play a game with it, you might end up with just less Bitcoin. So I think it's very good to explore new opportunities, but the focus and the high accretion for shareholders is still, and I think will for a very long time be with just focusing on raising capital and acquiring Bitcoin.
Can you speak at all to any conversations you've had or just things that you've seen from a custody standpoint, where you talk about banks and maybe it's a single custodian versus if there's, I know in the US are there any multi-custodial solutions over there where you have multiple custodians each holding a key to kind of guard against a single point of failure or any sort of risk of rehypothecation? Like, is that a concern, or do you think it's overblown, or how do you guys kind of think about that at present?
So on our side, of course, if we raise larger amounts of capital, we are considering to partner with larger institutions for the custody of the Bitcoin, of course. But the ideal situation would be to have multi-institutional custody. That would be, of course, an ideal situation. However, this is not available for now. For systemic type banks, they have yet to launch their single institutional custody before we see multi-institutional systemic bank grade custody solution. I think it will come over time because at the end of the day, you don't want to take the risk of a single point of failure, even if it's a systemic bank, because if you have a systemic bank that is doing fractional reserve banking and there is an issue or there is just hacking and so on, it will be extremely hard to get back this Bitcoin. So the ideal situation will be multi-institutional, but I know it exists with on-ramp and so on. It's just that for publicly listed companies that want to implement this solution, many times the easiest solution for them will be to go with an institutional banking player that will do the work for them, like Microstrategy has done. I think with, he's mentioned multiple times, the likes of Fidelity, Coinbase, and so on. So I think this will evolve over time. And if there are more institutional grade, multi-institutional solutions, I think there is no reason why Bitcoin Treasury companies will go with this. And especially if there is also a rise in new offerings and new capital market opportunities that develop around Bitcoin and that involve collateral to move around. I think to have collateral with multi-institutional type of custody will be quite also interesting to not only depend on single parties, but then you have human nature, and effectively every bank is competing to give you best conditions so that they are your single point of reference for different type of operations. So in the meantime, one thing that some corporations can do is also partnering with different institutions for different solutions. So it's not ideal, but it's also a way to not be fully dependent on one player as well. So yeah, no single solution. But I think now there is a lot of banks that provide solutions, and much more than when MicroStrategy started 5 years back.
Sure. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, All transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. Join us at The Win in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. It's kind of impossible to know what the future is, of course, but are there any products or services that you think would come to market first, just generally when it comes to products and services that a Bitcoin treasury company could develop, meaning lending, insurance, banking, or on the AI, BI front, different products or services? Is there anything that you think is just like very obvious from a product or service perspective, or do you think that's kind of far out on the horizon?
Well, based on what we can see already, Bitcoin-backed loans and basically getting some remuneration on some part of Bitcoin raised is something that we have seen. I think Mara in the US has lent a small portion of their Bitcoin, like about 10% more or less, or 6%, something like this. So it's already happening. You see, of course, Metaplanet do the Bitcoin magazine in Japan. You see that they do this Bitcoin income generation strategy when they tap into options market and so on to generate some yield out of a specific portion of Bitcoin. I think people overall need to understand that this is not playing around with Bitcoin on the balance sheet, but raising specific amount of capital for a different type of strategy. That could be a possibility. The only thing I would say is to be cautious so that this is not a distraction, because it can take a lot of things to develop a new product and to not be sure to generate any type of yield at all or even a loss. So in the condition that is not a distraction and in the condition that products are more mature, I think we will see more Bitcoin treasury companies look at these opportunities. And then something that people completely underestimate is the role that Bitcoin treasury companies will play in digital capital markets, because tokenization will happen on top of Bitcoin at scale. because this is where there is the most digital capital, and this is where it makes more sense to issue any type of securities at scale and with confidentiality, with liquid, for example, as a solution that provides efficient and secure way to do confidential transaction in a tokenized way, and that can be exchanged with BTC natively. And I think people completely misunderstand this is the ability already with Stoker in Luxembourg to trade MicroStrategy stock with BTC directly and arbitrage this during the weekend and 24/7. And so you will see more of this, that's for sure, more tokenization on top of Bitcoin Treasury companies and more opportunities and derivative products on top of Bitcoin and on top of Bitcoin Treasury companies. And so I think with the large amounts of Bitcoin that will be held by Bitcoin Treasury companies, these companies will have an important role to play in the emergence of digital capital markets. And potentially, imagine when Strategy has a multi-trillion-dollar market cap. If Bitcoin does just its thing, as always, you can imagine that they will have a lot of options at their disposal. And if they want to engage in a new type of activity, if it increases their Bitcoin per share at a higher rate than the raises that they can do, they will look at it, of course. But I think that might be more further down the road than people think. I think people quite overestimate what will happen in a very short term, but underestimate what will happen in the long term. Over the long term, I think that 50 to 70% of companies will be Bitcoin Treasury companies, and that basically financial instruments will all be based on Bitcoin as a pricing even mechanism. Maybe that's 10 years, maybe that's 15 years, but this will happen. And in this context, you can imagine that the first Bitcoin Treasury companies will be the best place to have this type of operations. If Bitcoin at this time is matching with maybe 20% CAGR instead of 60% today, I think at this time you could really have competition not only on the balance sheet capacity to raise the value of the company, but also on the P&L. The fact of the matter is still today and for this cycle and probably the next one, the capacity to increase value with the balance sheet is probably going to be more efficient than to increase the value with the income. However, it's not exclusive. And that's why I said even the valuation of company will completely change. Sometimes I get contacted by companies that say, look, this is the value of my company and so on. You look at the value of the company, you look at the cash flow. The normal way of valuing a company is to say, this is 5 million, 10 million cash flow. You multiply this by 5, 10. Well, why? If you look at the value of the cash flow in fiat terms, in 5 years, this is really nothing. You divide this price by 10, because if Bitcoin is 100K today, Bitcoin is 1 million in about 5 years, potentially. Well, your 10 million cash flow is just worth just 10% of the current value. So really what will matter for companies in terms of valuation is how much Bitcoin they have on the balance sheet, and then how much they can generate, but how much Bitcoin related returns they can generate specifically. Because if you cannot price your products and services in Bitcoin in about 5 to 10 years, at least increase the price of your products and services related to Bitcoin, well, the value of your company is going to zero. So effectively, if you don't have Bitcoin on your balance sheet, or you don't plan to have it, or you don't convert your cash flows in Bitcoin, you are effectively a stable coin in the future. So that's what you see with the CAC 40 companies in France, the 40 biggest companies, our local S&P 500. You look at the evolution of the CAC 40 over time, and you compare that with us in the last 3 to 6 months, and you look at the chart and you see the CAC 40 is like a stable coin, because basically since we adopted the Bitcoin strategy, we are up 200%. You look at the CAC 40, it's like completely flat. And even if you look at a 5-year chart, you compare MicroStrategy, 2000%, you look at Bitcoin 1000%, S&P 80%, Nasdaq 140%, and the CAC 40 is like 30%. Look, you divide 30% by 5, you get effectively like a monetary fund, you know. So that's also part of why launching a Bitcoin Treasury company in a local jurisdiction that has very poor performances is extremely accretive for shareholders, because people really don't even have another option to get exposure to Bitcoin, even indirectly, within their equivalent of 401k locally, you know, like tax exemption wrappers. And so they don't have any other option than the Bitcoin Treasury company to have gains that would surpass the normal ETFs for S&P 500 and Nasdaq and so on. So that's also part of the reason why you see so much growth for MetaPlanet in Japan, for us in France since we launched the strategy. And plus, on top of that, you get the early stage premium, you get the local market premium, you get the first mover advantage premium in the region. And so there are so much reasons why launching a Bitcoin Treasury company now that, of course, it's quite difficult to see why people don't do it. And the thing of the matter is, even if companies do it, many times they will make a mistake. They will do it very small, percentage allocation. They will say, okay, I will put 2% allocation in Bitcoin. Okay, but you know, that's like the example Michael Saylor give in some way. It's if you have 100 units of capital and you have the choice with Zimbabwe currency and US dollar, you will not put 5 units in Zimbabwe currency. You will not put 95% of your value in Zimbabwe currency and 5 in the dollar as an insurance policy. You will put as much possible in the dollar, you know. So with Bitcoin, it's the same. And I see there are a lot of companies that have Bitcoin on the balance sheet in the world, but very few of them have a large portion of their long-term capital in Bitcoin, because they don't understand the fundamental difference of Bitcoin versus the rest of assets. And on top of that, many of them have Bitcoin and other crypto assets, which is, of course, a complete misunderstanding of the absolute scarcity of Bitcoin. And on top of that, even if they have a large allocation, they are not focused on the treasury side on increasing Bitcoin per share, which is the worst thing you can do as a shareholder or the owner of a company, is to not have a dedicated person in your company fully dedicated to increasing Bitcoin per share for any operation you do. I mean, today, if you are a company and you do an M&A operation and you don't increase your Bitcoin per share, what are you doing? You know. So I think over time, companies will realize this. But when I was working with financial institutions, I saw a staggering number, is that you have 85% now of European and American systemic banks that have opened access to Bitcoin directly or indirectly through the ETFs, through the digital asset custody solutions, and so on. But you have less than 5% of corporate treasurers that are still really considering Bitcoin as part of their balance sheet. So we are extremely early. When I say 5%, it's not even 5% putting Bitcoin on the balance sheet, it's 5% considering. So you just only see now GameStop potentially and other companies starting to consider Bitcoin. But people think they are late, and what they don't understand, it's like this is potentially like 2017 equivalent for the adoption of Bitcoin by financial institutions. You know, it's extremely low for corporate companies. So for companies starting now at less than 5% adoption of the asset by corporate treasurers, you will see massive adoption over the next 5 to 10 years that will allow these companies to be placed in a way that will be extremely advantageous to do any type of activities, even on the operational side. And then on the AI activities, of course, that's something that we are looking at because we have data and AI technology consulting activities. And so I assume that over a certain period of time, there will be a lot of synergies between Bitcoin capital markets and AI solutions. You can see already with the Lightning and the inclusion of stable coins on top of Lightning by Tether, and the inclusion of potentially AI applications. I'm pretty sure that at some point you will have Bitcoin Treasury companies. Maybe that's further down the line. Maybe it's 5 years at least. But potentially having the Bitcoin used for processing payments and so on, for Lightning and increasing the capacity, for increasing the exchangeability and the transferability of Bitcoin at scale for financial institutions and so on. But I think that's really far down the line, because the key use case for now is store of value and, of course, exchangeability over the world, but the adoption by financial institutions and now corporates. That's a long answer to the question, but that's what we see over there.
I'd super appreciate it, because sitting here in New York, I don't really know what's going on over there. So I think it would be helpful for a lot of people to have that context. Could you walk us through your view on quantum computing and the potential risks, and also the potential risk mitigation options? It seems to be a hot topic, either from time to time or all the time, depending on what social media you're watching.
Yeah. Well, I recently gave a course at Polytechnique in France. It's like the French MIT. It's the most prestigious engineering school in France. I was invited to give a course there for top students on Bitcoin Treasury companies specifically. The slides are available. I published them on LinkedIn, and also the full presentation is available on X and our YouTube channel. And there was the question of quantum computing. And the answer I gave is that the real risk of quantum computing is that you will not be able to buy as much Bitcoin as you want. Because the most likely scenario is that in a materialization of the risk of quantum computing, the first networks that will be affected will be the networks of financial institutions, banks, where today most of the financial value is stored, and where attackers could focus to attack first. And so in such a scenario, the most likely thing is that you will want to buy the asset which has the most decentralized and secure network in the world, bounded by energy, which is Bitcoin. And you will have financial institutions that will be targeted and that potentially will restrict the flows of money out of the financial institutions in such a context. And so everyone will want Bitcoin, but they will not be able to get as much as they want. And people that have it, they will not be able to sell it for another inferior asset in fiat, because the fiat system will not be functioning as well as it is today. So I would say that cryptography is used everywhere, and Bitcoin has cryptography plus the security of the energy that is backing it. And so per se, Bitcoin is more secure than any other network. And the real risk is to not have as much Bitcoin as you want when this risk materializes. But even if we take this apart, the best cryptographers, and what I've seen Adam Back say, for example, is that this risk is quite also overestimated on the short term. It's more about a 5 to 10 year perspective. And so, of course, it's an important risk, because you cannot say 5 to 10 years is very far down the road. I've seen some government agencies that already say that some algorithms will need to be updated after a certain period, and so on. And so even in this case, even if a certain algorithm of Bitcoin is targeted by a new quantum computer, well, the scenario is that Bitcoin would be able to potentially update and to have a consensus to update certain things. Then you could say that certain past addresses that are lost, or Satoshi, Bitcoin, and so on, would not be able to be updated and so on to be saved from such attacks. Well, in such a case, at the end of the day, then the risk is on the price, not on the security and decentralization of the network. And something that I would say is much more likely is that if this risk arises, rather than trying to affect the network, an attacker would want to get as much Bitcoin as he can without people knowing it. And so, and without affecting the price of Bitcoin, rather making it that the price continues to rise and that they can gain as much Bitcoin as they can. And so, if Satoshi Bitcoin moves, everyone will see it. And so, the most likely scenario is such a player with such a quantum computing computer would likely engage in Bitcoin mining. And so, actually, something that is more probable is that the way we could discover the arrival of quantum computing is through a miner that would acquire a significant share of Bitcoin mining over the world because he would have a more efficient computer, a more efficient processors and so on that would be able to process and use quantum computing. And so in such a case, what would arrive potentially is that more people would be able to buy these type of computers, and that at the end of the day, Bitcoin mining would be even more secure over time because it would be secured by quantum computers decentralized over the world. And so I think that that's extremely bullish for Bitcoin because first, any other network would be affected before Bitcoin is. And second, Bitcoin miners would be the first one to have enough resources, and Bitcoiners will be the first one to have enough resources to acquire those quantum computers to mine more Bitcoin than the others, and over time to distribute this quantum computing power over the world. So I think, in fact, Bitcoin will make quantum computing adoption peaceful for the world because this power will be used to mine Bitcoin and secure the best form of capital. So yeah, I don't think this risk is something that is bearish for Bitcoin really. But that's just my 2 cents as a non-cryptographer expert. So anyone wanting to do research additional on this one and coming up with a specific report that we could all read, I think would be beneficial for the community. Because this risk is not to be underappreciated as well. It's important.
What do you see as the holding back more companies? I guess maybe we'll focus on public companies from adopting a Bitcoin Treasury strategy. And I guess I say public companies because private companies, in many cases, are closely held by one or two or very few people. So the decision making is easier or more straightforward, especially if it's just one person. But with public companies, is it getting the board and executive team and other stakeholders on board? Is that like the crux of why you don't see more adoption, or is it volatility, or is it like, what are the top couple of things, I guess, in your mind in that regard?
Yeah, I think you touch on a very interesting topic, not only for the control, but also on the potential performance of a Bitcoin Treasury company and ability to increase Bitcoin per share and ability to increase value. On the control first, I think it's quite interesting to look at Microstrategy versus Metaplanet. Because strategy had to do like as Michael Saylor says, a Dutch auction type of thing, where he says, look, if you don't agree with this strategy, you can go out of this now, and we offer you this price, and you take it. And now we only take basically shareholders that will be on board with the new strategy. So in fact, you see that even for a company that had a very large control, it was not that easy to make sure that everyone would be on board and to make sure that all the existing shareholders have a fair treatment and so on. So the bigger the company, the more work the company and the direction, the management of this company will have to do to make sure to treat well all the existing and historical shareholders, even if those shareholders don't have a significant percentage. But just as a principle, because if you've worked 10 years of your life to develop a public company and you have historic shareholders, you want to treat them well and you want them to be on board and so on. So at the end of the day, it will be more work the bigger the company is. And for Metaplanet, it was much faster because it was a smaller company, comparable to us at the beginning because it was like 10 to 15 million market cap. Now they are at 1 billion. We multiplied the market cap by 5x since the last 3 months already. But for us and as well for them, it was much easier at the beginning to make sure that everyone was on board because you have less people involved. It's a smaller company, you know more the existing people and so on. So at the end, for a smaller company, it's much easier and even quite irrespective of the cap table repartition, because for example, we had 80% float. So in fact, you have the management and you have also a lot of identified shareholders that you know and that are enough to make sure that you have the capacity to take new decisions and so on. So this is key, of course. I mean, if you're not able to do key decisions, that's impossible. But in our case, we had all the board aligned, and plus management. And this is just a few people. You have these people aligned, a few key shareholders aligned, and then you explain the strategy. You are very transparent, and it's an easier way than a bigger company. And then there is not only an importance on the control, but also what is interesting is even if it's a bit difficult at the beginning for a big corporation, and even for a small corporation that doesn't have a lot of control, even if a corporation is not in a position of make or seller with at the beginning, I think 70 or even plus % of shareholder control. Well, every time you do a capital raise to increase Bitcoin per share, and in the context of your Bitcoin strategy, you are reinforcing your shareholder alignment with your Bitcoin strategy. So in fact, as much capital you raise with the Bitcoin strategy in mind, as much shareholders aligned with the strategy you have. And so as much you reinforce the alignment of all shareholders and your capacity to continue implementing this playbook. So that's interesting for the control, but that's also interesting for the value and the potential returns of Bitcoin Treasury companies. Because in fact, and that's a reflection we had with an investor, is that the smaller the operational business of the company is at the beginning, the fastest the potential return it can get, because the Bitcoin net asset value is much more important rapidly than the operational business in terms of the market cap. Very rapidly. And so you have much more market discovery very fast in terms of the net asset value with the market cap and the premium. Whereas if Apple adopted a Bitcoin Treasury strategy company today, you would have still a lot of operational risk and operational potential benefits as well, of course, but operational considerations within the current valuation of the company. And so in this sense, you would have a valuation and a performance that would take more time to be directly linked to Bitcoin performance and the ability to raise capital to acquire Bitcoin. Whereas with a smaller company, the impact is extremely fast, and that's why you've seen the performances of Metaplanet last year that have been astounding, right? Even compared with Microstrategy. But that's not really comparable, because every time you take the performance since the beginning of the strategy, you get much higher returns than when you are in the middle or when you are at the end. So compared with today. So you see that this notion of control is very depending on the company, and that at the end of the day, no matter where you start, when you implement the Bitcoin Treasury company strategy, you over time you align more the shareholders with the strategy, and you have much more at the end decision power, even as you have dilution, because you get people to enter the shareholder base with the intention of increasing Bitcoin per share.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. If you've been following the Bitcoin Treasuries podcast for any length of time, you know one thing I can't stress enough is that if you're holding your own keys, that seed phrase backup better be bulletproof. Here's the reality. Paper degrades, ink fades, house fires happen, floods happen. Your handwritten seed phrase on a piece of paper, that's a point of failure just waiting to destroy your financial sovereignty. That's exactly why I've partnered with Stampseed. These guys have figured out the gold standard for seed phrase backup. Permanent titanium plates that you can stamp yourself. We're talking about a metal that can survive temperatures of over 3,000 degrees Fahrenheit, nearly triple the heat of an average house fire. What I love about Stampseed is they've made this accessible. You get the complete toolkit with everything you need. The titanium plates, the stamps, the jigs to keep everything aligned perfectly. No guesswork, no special skills required, just permanent, indestructible backup of your financial freedom. And if you're running multi-sig, Stampseed scales beautifully. Buy the base kit, then add as many additional plates as your setup requires. It's the most cost-effective way to properly secure a multi-sig configuration that I've found. Here's a nice touch. They'll even customize the back of your plates. Want your company logo or your wallet identifier, some personal reminder system? They've got you covered. Head over to Stampseed and grab your kit and titanium plates. Now 21% off site-wide with code TIM21. This exclusive conference offer ends on July 11th, so don't miss out. Go to stampseed.com, use code TIM21. How do you educate a board, executives, stakeholders, shareholders? Like, do you just ship them a book of the Bitcoin, ship them the Bitcoin standard and some YouTube videos, or anything specific that you can share as to resources or certain, very specific and dynamic and crucial conversations? Or is it charts? Is it, some research report from a well-respected institution? I'm just very curious about how the reality of all that, right?
Yes. So I'm lucky I didn't have this issue with the blockchain group when I joined, because I asked two questions at the very beginning without telling my opinion. I said, is it about Bitcoin only or something else? They said it's Bitcoin only. And I said, is it about MicroStrategy playbook or is it to play around with more things? And they say MicroStrategy playbook. And then I said, okay, then we can continue the conversation, because you don't want to waste your time with people that didn't understand Bitcoin or didn't understand Bitcoin treasury company model. If you are considering launching this type of strategies, because to be honest, to get to the level where you really understand Bitcoin and you really understand Bitcoin treasury companies, it's very hard for 99% of people to understand this if they haven't spent at least one Bitcoin cycle of understanding Bitcoin, getting deep into the understanding and so on. And so I would say that it's still possible, especially within very big multinational corporations. And that's what I was doing in my previous job as digital asset lead at Accenture, is that I was working with some corporations and financial institutions to help them understand the value of Bitcoin and how it was different from the other type of assets and so on. And I would say there is not one single playbook. Of course, Michael Saylor managed to do this by sharing a lot of content, and you need to keep educating people and so on. But the most efficient way I've done it with C-suite level executives at the most important financial institutions and corporates is that you need to go to where the people are and where they start. And you need to ask them a lot of questions, and they need at the end to come to their own conclusion based on the facts, So the good thing is that before BlackRock, you had to go through this very long process of understanding and nudging people towards the right answers and so on, and give them the right material. Now, the good thing is the career risk has shifted because BlackRock is full on Bitcoin and Fidelity as well, and so on. And so now the burden of proof is on the person that doesn't believe in Bitcoin. So before, when you said Bitcoin is the more secure and decentralized network over the world, it's the best store of value and so on, you had to prove it to C-suite level executives. You had really to take hours and hours of slides to say why this was true, despite the fact that many financial institutions were not agreeing with this formally. Now, with many financial institutions agreeing with this formally and putting out these statements, the burden of proof have shifted, and you can save a lot of time because you can say, look, this is the fact. If you want to say otherwise, then you can talk with BlackRock, you can talk with Fidelity, you can talk with Franklin Templeton, and good luck fighting against their thousands and thousands of employees that now are dedicated to selling Bitcoin to their clients because it's the best store of value. So I think the education work is much more facilitated now that we have the biggest financial institutions on board, and even now the US government, potentially, I hope they will have really a Bitcoin-focused strategy for a long-term investment. So I think that this has shifted, and as Bitcoiners, we should also be cautious because there is a possibility where this shifts again if major financial institutions have over interest and they start to make the promotion of products that would have less ethical standards as Bitcoin. But overall, even over time, even if such things happen, Bitcoin will win over time just in the free market anyway, because it has the best technology for store of value. So for people starting to think about the strategy at boards and trying to convince boards of this opportunity, I would say that there is one chart that is just a home run for any conversation, is the chart of Michael Saylor, where you have Bitcoin 60% CAGR, Magnificent 7 30%, S&P 15%, and everything else going out to zero and even negative effective returns. And this one, you cannot argue with it. So people say, you can say, look, it will be different in the future and so on. But the fact of the matter is that this is how you can get ahead of the competition. And if you don't adopt this asset, you will be completely obliterated by the 300 million people that are adopting it already.
What's your view on the strategic Bitcoin reserve in the US and the announcement through executive order of a sovereign wealth fund? Like, what's your kind of view and base case on how that could potentially play out?
So I think that if the US was going really to go very hard on Bitcoin acquisition, they would do exactly what they are doing. They would not say it specifically before they are in capacity to execute on an acquisition. Because, of course, if the US says today that they are going to buy X amount in 6 months, the price will explode, and you can really argue that this wouldn't be the best way to do it for American people. This would be the best way to do it for foreign nations, really, because foreign nations could be able to execute before. In any case, foreign nations are already executing before. You can see it already with smaller countries. But I would say that this is exactly what a country would do. So, and with the perspective of a publicly listed company, I can say that there is a lot of things you cannot say before it is really possible to say it. It's published and so on. And there are a lot of things that you cannot do because you need to wait for certain elements. For example, we would love to acquire a lot more Bitcoin very fast and faster than it's possible. But the fact of the matter is we have to wait for authorization and the capacity of the shareholders with a general assembly and so on. And so you cannot say that an operation will happen before it happens, basically. So what we do, however, is provide as much transparency as we can when we have the information. And I think that's what the US will do as well. But I think it's quite early. I think it will take some time. I think it's positive that it takes a bit more time because the US has a separation of power. And there is, of course, debates to be had. There is discussions between representatives of elected people and so on. So it's quite normal, actually, that it takes a bit of time. We would love the US and, for example, France, in my case, to buy Bitcoin just now and just acquire the Bitcoin already, But you also know that even for standard people, if you acquire Bitcoin right now and you don't understand Bitcoin, you will make major mistakes. Because if you don't understand the asset before buying it, you will then panic and so on. And I think the states can panic as well, So I think it's good that a state like the US takes the time to consider it. I think it's extremely positive. Even if we stay as we are with just a strategic stockpile, it has legitimized a lot the asset class over the world. Even in France, there are already politicians that are thinking about positioning on the topic. And you have seen already a politician in Europe to start to position. And of course, the US and Donald Trump and Senator Cynthia Lummis and Howard Lutnick and so on, positioning strongly in favor of Bitcoin specifically. It's a very good thing for Bitcoin. Everything is good for Bitcoin, but this is accelerating adoption at a scale that people don't see. Because financial institutions, many of them have taken a decision after Donald Trump election already. So people don't see it, but a lot of financial institutions since Donald Trump election are working day and night to launch their offerings, and it takes a lot of time. And so overall, I think the current situation is extremely good because all financial institutions are lining up to provide the infrastructure needed to adopt Bitcoin at scale. And the US government eventually will acquire it either in a matter of months or anyway at some point in time because they will be forced because other nations will have done it before. So in both cases, it's bullish. If they do it now, they will benefit a lot. But if they do it later, it might be even more because more nations will have done it before and they might buy even more than they had previously thought. So I think what's more bullish, it's potentially the preservation of the rights of self-custody and the preservation of the rights of developers to publish codes, code and free and open source code. And I think this is an extremely important standard for the US to bring to the world. And I'm very happy that a lot of people have pushed for this because now it can become a potential standard for other nations like in the EU where people love regulation. And so if they can inspire themselves from these rights of self-custody and publishing open source code, I think that's in and of itself the best win that we've had. And that was more important than buying Bitcoin, because the most important thing is that there is private sector Bitcoin adoption. Nation state adoption is a natural consequence, but it's not needed for Bitcoin to succeed.
How do you see AI and Bitcoin working together? I think one or several people have made the case that you'll have AI agents interacting together more and more and using Bitcoin as the natural solution, as the global digital currency. But are there other kind of obvious or top line use cases in the AI space that maybe are not part of the mainstream conversation or narrative yet?
I think the intersection with AI and Bitcoin will take more time than people think. However, it's highly possible that we will see interaction with the payments side of things quite fast. But I think in a more experimental and early stage way. I think the use case I think where it's closest is with Noster. And with Zaps and so on, you can imagine a lot of interesting things in terms of streaming payments to people depending on certain conditions. And implying AI might be interesting, but I think AI and specifically what has done ChatGPT and so on is quite in an early stage. And the knowledge of the people at the head of those companies on Bitcoin is still quite limited from what we can see. And so I think it will take some time before it materializes. However, I agree that if there is one global currency that could be adopted by an AI, it will be Bitcoin at some point. It might be just an application on top of Bitcoin. It might be Lightning as a layer. It might be a stablecoin on top of Lightning. But ultimately, the true stable value stablecoin is Bitcoin itself. One Bitcoin is one Bitcoin. So I think over time, AIs will use Bitcoin, but it's very early. When I was working with banks, they were just starting to think about how to use ChatGPT. So, and they hadn't still put in place their offering for digital asset custody and Bitcoin offerings. So I think it will come from maybe startups starting to do some relationships. I think something more probable is when you are able to trade a lot of Bitcoin-related stocks with Bitcoin Treasury companies, with Bitcoin natively in a tokenized way, with Liquid, for example, and you could have professional trading activities that are powered by AI in some way to do some allocations, to do arbitrage activities, and so on. So I think financial sector will be an extremely, and potentially is already, to be honest, an extremely big application for AI for financial decision making. But in terms of AI bots using Bitcoin itself, I was before even joining Accenture as digital asset lead, I had applied machine learning and deep learning on top of the Bitcoin blockchain data. I used to do data science, and I did this. And many times with AI, you have black boxes. You don't know really what is happening with the different calculations that the AI is doing. And so it's extremely hard to give the ultimate decision power to an AI with a black box. You take so much risk with this that many times you will have a lot of safeguards and you will have still a lot of human interaction. So I think there will still be human interaction at some point, but the interaction between robots, between Lightning payments or liquid tokenization plus AI can open new ways that we don't see for now. But I would say it's more that there will be a combination of services that you will be able to pay for AI-related products and services over the world with Bitcoin more easily first than something else. Do you have any thoughts on your side of where it could be applied?
I haven't spent a lot of time looking into it or contemplating it, and I just heard the AI agents sort of use case for it. So yeah, I was just always very curious as to what additional applications or real world scenarios we might see. Over the last couple of years, we've heard Michael Saylor talk about the three things that really needed to occur to take Bitcoin adoption to the next level. And it seems like at least the beginnings of those have now all happened, right? The banks being able to custody, FASB, fair value accounting, and regulatory clarity, which the spot ETF CTPs, kind of brought to through the SEC, allowing them to come to market. Do you have top of mind like the next three things, or even one or two things that you think would take us to the next level of adoption and kind of like global understanding? Because it seems like even now, with everything we've discussed, if you just try to go sometimes explain some of these things to someone, it still can be challenging.
Yeah, for me, the main one, there will be, I think, many others in the meantime. But the main one is the adoption of Bitcoin by central banks and governments. Because and you see it as a Bitcoin Treasury company, even if you want to explore Bitcoin-related financial instruments, you still are in a fiat world. So even the convertible notes of Michael Saylor and related Bitcoin Treasury companies, they are converting fiat in Bitcoin, and they are leveraging the existing system to take advantage of it and to capitalize on it. But we are still part of the fiat system. And so that's why the strategic reserve is quite significant, because it would really unlock a potential step towards having central banks that would relate to Bitcoin in a very different way. So you already have this movement in the US emerging, where regulators will be now very favorable to the industry overall, but really coming back to a real Bitcoin standard from central banks themselves will unlock a lot of things, because central banks and governments still see Bitcoin as a threat. They think that using Bitcoin from a government perspective or from a central bank is a threat to the fiat currency. And so in some ways they might have a point, but in another way, the logical reasoning is that as much Bitcoin a country has, as much the fiat currency this country has will be powerful. Because if you don't have Bitcoin, you are just a poor nation. So if you are a poor nation, you have a very poor currency. And so today, Bitcoin is very small in terms of market cap compared with other assets, 2 trillion versus 900 trillion, right? But in a world where Bitcoin becomes 20 trillion and then 100 trillion, 200 trillion, as a central bank, as a government, if you don't have Bitcoin, you are just a poor government. So I see the unlock is really not only the strategic reserve, but really to have Bitcoin as a standard store of value and a standard currency and capital network for the financial system as the key to really unlock a Bitcoin standard type of economy. It seems like it will need like 20 years to get to this step, but it could be really accelerated, honestly, by the US with a strategic reserve that would become a huge part of the nation net worth. So I would say that the key step is this one. And I say that from a European perspective, because if we had a central bank with the the ECB, that would be very favorable to Bitcoin. It would change completely a lot of things in our economy. So maybe we would be less poor as a continent first, but it would unlock a lot of things because you could price and transact in Bitcoin with anything, So that's why people have been very deceived by, the recent a bit setback with El Salvador with the IMF deal, where basically you had to downgrade a bit the legal standard of the country. I know it's still there in terms of the acceptability and so on, but it's not mandatory. So I agree with the non-mandatory aspect because you want freedom in your country. But in terms of the standard, if the US were to have the same standard in terms of balance sheet for a nation as El Salvador, that would make a huge difference, and that would really create something that would be hard to estimate in terms of the impacts. People think the impacts could be possible to be priced in, but it's quite impossible, really. So I would say this would also completely change the possibilities of Bitcoin Treasury companies, because as a Bitcoin Treasury company, if you have Bitcoin becoming a global standard for central banks and for governments, then you will be, again, one of the best placed companies in the world to do anything and to start to really have a lot of flexibility legally to do much more things that are priced, operated, transacted in Bitcoin. And actually, at this time, you could see much more interaction with AI because in terms of regulation, I think there is a lot of work to be done to have more freedom to innovate with both Bitcoin and AI, actually.
I really appreciate you taking so much time with us today. I'll send it over to you if you have any closing thoughts, and if you could tell everybody where they can find you and the blockchain group online, and if there's any specific resources that you recommend to others.
Sure. So, well, I work for Bitcoin. That's my whole focus in life because I believe that's the best value add for me, my family, my friends, colleagues, Bitcoiners over the world, society and the world. So if I can help in any way, I will be very happy to do so. Any company, any executive in the world that would like to explore the opportunities of such strategies, I would be very happy to share experience, expertise, and the matter. And then how to follow me? I'm at my name, Alexandre Laizet, on X, on LinkedIn. Please feel free to reach out. I will be happy to have a conversation. And of course, the blockchain group at _ALTBG on X and the blockchain group on LinkedIn. That would be the best ways to reach out. And thank you so much again, Tim, for having me. I'm a big fan of the show, and I wish you well.
Thank you very much for your time.